Budget 2020 is round the corner and Prime Minister Narendra Modi has asked the common citizen for their suggestions on what they expect from the second budget of Finance Minister Nirmala Sitharaman. Now it's interesting that in the midst of slowdown, the common man expects more disposable income in his hands so that he can meet his daily expenses, especially in the middle class and lower middle class. The biggest benefit that the Prime Minister and the Finance Minister can provide to the common man is to raise the basic exemption limit from 2.5 lakh currently to 5 lakh across the board. Right now, only those who are earning less than rupees 5 lakh in a year get the exemption from income tax. If this exemption limit can be raised for every taxpayer in the country, this will be a huge bonus for the common man, especially the lower and the middle class with higher disposable income in their hands. Another way in which the government can help the common man is by ensuring that inflation doesn't rise beyond a level. 7.35% rate of inflation, consumer price inflation, is a very high rate of inflation, largely because of vegetables and fruits in the market. If the government can ensure that the prices stay within limits, that would be a huge incentive for the common person. Housing is such a critical need that the government has been focused on providing certain tax benefits to affordable housing. In the last budget, Finance Minister Nirmala Sitharaman had provided a 1.5 lakh exemption from tax to affordable houses bought under rupees 45 lakh. It is expected that this exemption limit could be raised to 75 lakh because 45 lakh doesn't buy an affordable house in the large metros, especially Delhi and Mumbai. The other major expectation of the common man and the middle class is that prices of items of daily use should be brought down for them to make them affordable, especially consumer durables and some FMCG products. Now there is a big expectation that GST rates on some of these items would be rationalized and would be brought down to aid consumption. That would again be a major boost to the economy, especially by aiding consumption, by increasing demand in the economy. So there is an expectation that that GST rates on these products, especially on durables and FMCG, should be brought down. And finally, though this is not directly related to the budget, if the government can ensure that interest rates are brought down for the common man, for the consumers, it will be a major boost to consumption in the economy. Interest rates are still particularly high for private sector bank rates, and entire repo rate reduction by the Reserve Bank of India has still not been passed by the banks to the consumer and to the industry. So about 1% of repo rate still remains untransferred to the consumer as far as bringing down the rates is concerned.